Unit 5. The Trial Balance and Final Account of a Sole Proprietorship. Session 3. Trading Profit or Loss Account 1. By the end of the session, you should be able to analyze a given trial balance using the class of account as the criteria. State the type of account used to draw up the trading profit or loss account. State the type of account used to draw up the statement of financial position, and state the equations employed to determine net profit and gross profit. Analysis of a trial balance. To be able to prepare your final account with little difficulty, it is important that you understand the items appearing on the trial balance and know the class of account each item falls under. This is essential because it is the class of account to which an item belongs which determines how it is treated. On the debit column of the trial balance, we can only have real account, for example, motor vehicle account and bank account. Personal account of the proprietor, drawings account, personal account of customers, that is debtors account, and nominal account representing expenses and losses, for example, purchases account, rent account, general expenses account. Also, the credit column of the trial balance contains personal account of suppliers, that is creditors account or account payable. Nominal account representing incomes and gains. For example, sales account, commission received account, rent received account, interest received account. And personal account of the proprietor, for example, that is the capital account. In preparing the final account, the following rule is employed. 1. The income statement, that is the trading profit or loss account, is prepared from nominal account representing expenses and losses, and nominal account representing incomes and gains. 2. The statement of financial position is prepared from real accounts and personal account, including personal account of the proprietor. This is an example of a trial balance using the criteria we have described as the items or the accounts used in the preparation of the trading profit or loss account and the items used in the preparation of the statement of financial position. We are going to analyze this trial balance and see how we can extract these accounts to prepare the statement of profit or loss and the statement of financial position. We remember that the items we need for the statement of profit or loss are the nominal accounts, which can be in the form of expenses and losses or revenues and gains. And the accounts we are going to use in the preparation of the statement of financial position are the real account and the personal account. So in addition to this statement, we have also been given information that the stock of inventory at the end of the period is 50 million. This trial balance can be analyzed as follows. The debit column contains the following classes of accounts. Real accounts, for example, the buildings, furniture, fittings, cash, bank, treasury bills, and the personal accounts, trade receivables or debtors, and drawings. The nominal account, made up of the purchases, sales, returns, carriage inwards, carriage outwards, motor vehicle expenses, lighting, rent, rates, general expenses, salaries, interest on loan, discount allowed, and the opening inventory or the opening stock. The credit column of the trial balance also contains the following classes of accounts. The personal account, that is capital account, 4-year cooperative loan account, and then nominal account, sales, purchases, returns, discount received, commission received, and rent received. Trading profit or loss account. Generally, we undertake a business to obtain some profit. Profit is thus the reward for undertaking a business. It is the reward for taking some risk, such as that of losing one's capital should the business collapse. The account prepared to show whether a profit or loss has been made for a financial period of a business entity is called the trading profit or loss account or the income statement. Trading account. Generally, there are two types of profits. These are the gross profit and the net profit. The trading account is the first part of the trading profit or loss account. It is prepared to ascertain the gross profit or loss of the trading for a period. Gross profit is the difference between the value of sales and the cost of sales. Cost of sales is found by the following. The cost of sales is equal to the opening stock or inventory plus the cost of purchases minus the closing stock or inventory. Hence, the gross profit is determined as gross profit is equal to the sales minus the cost of sales. More specifically, gross profit can be stated as gross profit is equal to the net sales minus the cost of sales, where the net sales is equal to the total sales minus the sales returns or the return inwards. Another term used in accounting for sales is turnover. Net sales are thus the same as net turnover. Any time the word net is applied in accounting, it means that something has to be deducted from that item. Net sales therefore imply deducting something from sales. Remember that when sales are made, some of it could be returned by the customer if they fail to meet specified requirements. Note that immediately goods are returned, they are not recorded as a deduction from the sales. Rather, they are placed in the return invoice or sales returns account. To determine the gross profit, the sales returns will have to be deducted from the sales to obtain the net sales. Net sales therefore is obtained by the formula net sales is equal to the total sales minus sales returns. Cost of sales. The main issue here is to determine the actual cost of the goods which has generated the sales for that period. It is the total of all the expenses incurred in putting the goods in a saleable condition. The cost of sales consists of various items. The cost of sales, therefore, is the net purchases for the period plus the opening inventory less the closing inventory. This may be stated as cost of sales is equal to the opening inventory plus net purchases minus closing inventory. Net purchases. Net purchases here is the total purchases for the period plus cost of transporting the goods to the business, called carriage inwards, less any purchases returns. Net purchases can thus be obtained from the formula net purchases is equal to the total purchases plus carriage inwards minus purchases returns. Sometimes the business may have incurred some warehousing expenses. In such situations, these expenses are added to the cost of sales because they are considered as expenses incurred to store the goods for sales. The cost of sales therefore becomes cost of sales is equal to opening inventory plus net purchases minus closing inventory plus warehousing expenses. The trading account may look like this. We have the name of the entity, then the title of the account, trading profit or loss account for the year ended 31st December 2019. Sales, the amount is given less sales returns or return inwards, and that gives us the net sales. Less cost of sales. Now, cost of sales constitute the opening inventory. We add purchases and add carriage inwards. So the purchases and the carriage inwards less the purchases returns or return outwards is giving us the net purchases. The net purchases is the added to the opening inventory to arrive at the cost of goods available for sale. Then we less the closing inventory and we arrive at the cost of goods sold. After that, we add any direct expenses, which may be, for example, warehouse expenses or wages, and we arrive at the cost of sales. Now, the cost of sales is deducted from the net sales to arrive at the gross profit. So this is the trading aspect of the trading profit or loss account. Profit or loss account. Net profit. This is the clear profit made by the business for the proprietor in the financial period being considered. Profits are obtained by matching revenues against the cost of generating that revenue. It is the gross profit less other expenses of the business other than those considered in determining the gross profit, plus other incomes of the business. It is obtained by the formula net profit is equal to gross profit plus other incomes minus other expenses. In this session, we analyzed a given trial balance using the class of account as the criteria. We also stated the type of account used to draw up the trading profit or loss account and stated the type of account used to draw up the statement of financial position and stated the equations employed to determine net profit and gross profit. Thank you.